Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
My guest on the podcast today figured out pretty early on that what he wasn't looking for was a couple of rental properties. He wanted to build a large portfolio of rentals. He has some real estate experience, not a ton, but he knows what he's doing. But what he has more of is business experience. And he's using that business background to set up his rental properties like a business. Now, Kori, I got to be honest with you, building out a large rental portfolio and your rentals are all in another town that you've never been to, that sounds a little bit risky. Do you think there's a lot of risk in what you're doing?
As far as the risk involved in single-family rentals versus other real estate investments or other investments in general, I feel really confident. And it's a matter of making sure that you're organized and know what you're doing. If you're organized and know what you're doing, I think that there's far less risk. And so I don't feel a whole lot of risk because I've been around it for so long. These are not, our first transactions. But you should, I think, there's a risk component there and you have to think twice. Is this for me? And do I have what it takes to research and understand the market well enough to reduce my risk, to mitigate that risk?
On the podcast today, we're going to figure out exactly what Kori is doing and how he's building out his rental portfolio. Joining us on the show today from Denver is Covrigaru. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Kori. There's a new investment opportunity you need to know about, and surprisingly, it has nothing to do with real estate. But lots of real estate investors have been diversifying into this. It's an asset class that's thousands of years old and valued at over $6 trillion. That's almost 4 times larger than the market cap of every cryptocurrency combined. The problem is it's been limited to the wealthiest of the wealthy. But now, thanks to a recent change in the legal code, it's finally available to everyday investors. And there's only one startup that's giving you access to this exclusive world. Masterworks makes multi-million-dollar paintings as investable as REITs. For example, instead of paying $20 million for a Bansky outright, you can invest in a fraction of one. They're always adding new paintings to their platforms, and offerings have sold out quickly in the past, so I wouldn't wait around. If the volatility of crypto has been giving you the jitters, you can skip the Masterworks waitlist with my link at masterworks.io/rental. That's masterworks.io/rental. I'll see you there. See important disclosures at masterworks.io/disclaimer. Whether you've been buying rental properties for years or you're looking to buy your very first rental property, the very first thing you want to do before you go out and find a great deal is to figure out your financing. The lender that I recommend is Chaley Ridge from Ridge Lending Group. She's a nationwide lender, and her specialty is helping investors finance rental properties. Chaley has a special limited time offer just for our listeners. She will pay for your appraisal up to $500 when you close a loan with her. Just mention you heard about this on the Rental Income Podcast. If you want more details or if you're ready to get started today, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com. NMLS 42056. Kori, so I'm dying to hear about your strategy. Tell me what you're doing.
So, I've been involved in the single family rental industry for a while, and I've kind of been watching the big players do their thing dating back to the Great Recession. And I wanted to get my feet wet. I wanted to eat my own dog food. And so what we did was got a couple partners together, some people from Planomatics, some friends and family, some friends of family, right? Got together, 13 people, committed a certain amount of cash to deploy to this unknown venture. And we decided to set out and start buying portfolios of rental properties and seeing how far we can get and kind of learning as we go. That's really the summary of what we're doing. There are a lot of details behind it. I can't wait to share them with you, but that's the summary of what we're doing right now.
So you're kind of like operating kind of like your own little hedge fund. Like a lot of the big hedge funds in New York, they're pooling money together. They're going out there and they're buying huge portfolios of rentals. But it sounds like you're doing the same thing, just on a smaller scale.
And that's exactly right. And I think that a lot of those hedge funds probably started out in a similar way. The way we're very much viewing this initial round and this initial partnership is a proof of concept. And so, yeah, we want to be doing this on a much larger scale, but getting our feet wet and kind of doing it slowly and doing it sort of on the side and watching it build up and making educated decisions and learning about it is really what we're after right now. We don't have a grand plan for what to do with this particular portfolio. It really was kind of like a search and destroy mission for us to see what we're capable of.
So tell me about your portfolio. Like, what have you and your group bought so far?
To give perspective to the listeners, I mean, I live in Denver. I've never stepped foot in Birmingham. None of our partners have, actually. So I'm a partner. I live in Denver. We've got a partner in Chicago, LA, all over the place. We've got one overseas. That's a whole nother story if you want to get into lending for non-national citizens. Yeah, that's what we've got. We've got 7 properties. They're all in the Class C neighborhood. So the purchase price is really low, but the cap rate was really high. And we're looking right now for more properties to add to the portfolio. So we're looking in Birmingham. We're looking in areas around Birmingham. We're also looking in other states. We're looking in Tulsa. We're looking in Columbia, South Carolina. I know we did some research in Boise, Idaho. So we don't have this structured plan where it's like, okay, we do A and then B and then C. We're very fluid, very agile with this portfolio.
And you said that you're looking for proof of concept. So you have this idea that you're going to be able to buy a big portfolio, but you're kind of just taking baby steps towards getting there.
Yes, but I said we don't have this grand plan. Well, I actually do have a grand plan. The grand plan is how big can we make this portfolio without having to step foot in any of the locations where the rentals are and without having to employ anyone full-time in any of the areas where the rentals are. And that's really the goal. Like, how big can we get this portfolio? How many properties can we have under management and not have the logistical issues of traveling from state to state when things go wrong, when we want to renovate, when we want to check out a property for due diligence? All of those things are handled remotely for us. And that's really the goal of this particular fund.
And, that's really the great thing about living today is that you can do that. I mean, this wouldn't have been possible, or people would have thought you were crazy for trying this just 10 years ago. But there's so much information online that it doesn't sound crazy to me that you're doing this.
Well, Dan, this was, first of all, some people think it's crazy today, but certainly 2 years ago, I mean, this was not even, I don't even know if the tech that's out there supported the ability to do these things, right? So, yeah, I think that there are a lot of people that think that's wild today, but it's becoming a reality. I mean, you'd be amazed. Like, we see the advancements of technology and society, given the pinch circumstances we've been under. No, real estate's no different. There's a lot of room for disruption, a lot of room for innovation in the space that just hasn't been realized yet, especially in the single family rental industry.
So why not go to Birmingham? Like, why not check it out, get a little bit familiar with the city? Wouldn't there maybe be some advantages to maybe seeing things in person?
You might be right. There might be, but I always, I tend to think about opportunity costs. Like, what could I be doing with that time, as opposed to traveling on a plane and checking into a hotel and spending money on food and doing all these things, when really all that information I can get from a property manager, I can maybe get from a company that provides boots on the ground to acquire property or neighborhood data. Statistics online right now, like data that's being pulled from county records, is really, really accessible. So I really look at it as an opportunity cost. And then I received feedback early on in my days back in 2005 when we started our first business. And that was, don't do the work so that you can grow the business, right? And so early on, like, we were shooting photos for real estate agents. We hired someone to shoot photos for the listings and the orders that we got on like day 2, so that we could focus on making the service better and growing the service. And so it's very much like working on the business as opposed to in the business. I'm a strong believer in opportunity cost and making sure that you don't leave anything on the table.
And so how long has it been since you bought the properties you have now?
So I'll tell you, I mean, it took us about a year just to get our organization structured, get the right partners in place, get the right entities registered and the right tax ID numbers and all of these things and operating agreements. So in hindsight, like it took a year. It could take far shorter than that, but that took a while. And so by the time we kind of, tied that up into a bow, from the moment we started looking for property, I'd say we were closed 4 months after we really started to look for as real novices in that area. But since we started to acquire, that's when things accelerate. And so it took us a year to get our first properties under management, but our second portfolio came less than a month after the first one, and we're already under contract on a smaller portfolio in the region. So it's like once you get your ducks in a row, you understand your process. It's very much a rinse and repeat process, and you can refine that process. But documenting the very details of what we went through to get to where we are today, and being able to pull that playbook out and say, okay, let's start from the beginning and do it again. That's where it becomes magical. That's where it becomes scalable.
I think one big advantage you have in doing this is it sounds like you have a business background. You've run businesses, and it sounds like you're approaching this with a business mindset, that you're not just casually buying properties. You're actually setting up a business, and your business is buying and managing properties.
100%.
Yeah.
I mean, this is very business focused. I joke with my partners about how fun it is to negotiate, investment properties versus primary residence, right? There are so many variables that go into a primary residence. You're 50-50, usually making a decision with your spouse or partner. There are emotional attachments, like seeing a kitchen, saying, okay, I can raise my family in this kitchen. When it comes to investment property, it's very analytical. It's very business focused. It's very spreadsheet focused. Like, do the numbers add up? And, losing out on a portfolio, let's say, it's just not that big of a deal. Like, it's not like I really wanted to live there. You know what I mean? So,
sure.
When you remove the emotional aspect of it and look at it from a business perspective, and we know, like, there are families that live in these homes. So I'm not talking about the experience for the tenants. I'm more talking about sort of the process of acquiring and getting properties under management. When it's business focused like that, it's fun. And that's how we look at it.
Sure. All right, so you've got 13 partners that are in on this with you. So how does that work? Like, did everybody put in an equal amount of money, or do you have different levels of partnership? How did you work all that out?
Yeah, so this is where I would say stop the note taking, or if you're going to continue to take notes, write down what not to do. It's very complicated. I mean, we started out, we were 5 at first, and then you get a call from a friend of a friend or a buddy. Hey, I heard you're doing this thing, right? Like, what's going on? How come you didn't include me? And it quickly grows to 13. It's funny because when you're not looking to raise money, that's when somehow people come to you and say, hey, I'd like to invest in this thing, right? So we're 13 partners, equal shares. Everybody put in the same amount of money. We don't have preferred partners or investors. We actually do have one partner that is overseas, that is not a U.S. citizen or green card holder, and that is making things slightly more difficult from the lending side. So this was thrown together real quick. There are like 3 of us that are really making decisions and putting in that extra time, and the rest are passive, but we're all equal shareholders on this round. In retrospect, going forward, I would have set up a management entity. I would have set up an investment entity. I would have split up the limited partners versus preferred partners. And so I would really, honestly, like, in retrospect, I would definitely talk to an attorney about that structure and making sure that it's conducive to scaling the business and just how the business operates.
So it sounds like you didn't talk to an attorney. You just kind of put this together as you were getting started. It just kind of slowly evolved.
Well, here's the funny part is one of our partners is an attorney, but my jab at attorneys is they really don't know a whole lot about the law except for their specific, work. Right. So even having an attorney, we talked to an attorney, he was a partner, but setting up real estate entities and different structures was not his specialty. So we are working now with an attorney that has a background and specializes in real estate investment. And so now we're more on the right track there, and we'll have to reconstruct our structure to accommodate our goals and plans a little bit better. But I would definitely, that's where I would spend a few $100 or whatever it takes to get the right entity in place to make sure that you're set up for success.
Absolutely.
That's something I would do. Yeah.
Yeah. Anytime I've ever hired an attorney, it's been well worth it, for the advice that they give you and the shortcuts. So talk to me about how you're buying these properties. So everybody put their money in and you had this cash. how were you buying the properties? Were you buying them with the cash that you raised, or were you getting financing?
Yeah. So what we learned sort of the hard way is that homes that are typically Class C properties in lower income states and areas don't even qualify for financing as a one-off property. I think the limit's like $75,000. That gives some context to what we're investing in right now. We are moving into more Class B and Class A, but what we did was we used the cash that we had from the partners to make cash offers. And I believe strongly that we won at least one of the two portfolio deals that we made an offer on because it was cash and quick to close. And so I think that was a huge advantage. And our plan after that is, you can refinance a portfolio property. So we're looking at refinancing those 7 properties right now, and being able to leverage, 70% of that and continue to scale. But we definitely use cash at first, and that's how I would continue to do it. I would continue to, especially with the market being as hot as it is, I would keep making cash offers if capable and refinance after closing, because cash deals are the ones that win the business right now.
Sure. And then you get your rents every month, and not having mortgages right now, what are you doing with the cash that's coming in with the rent, the rent money that comes in?
Yeah, we're just putting it right back in our operating account.
Okay.
I mean, we're really, we're not. This isn't a quick hit. We're not distributing cash to the owners, or a percentage of cash from the rentals that come in. Everybody understands this is a wait and hold. We could wait and hold 10 years and not take a penny out. Everybody understands that that's kind of the deal. If people were in a pinch and needed their cash out, I'm not exactly sure how we'd go about that. I know that we have people that want to get in and other partners that want more. So I'm sure we would figure it out. But as far as the cash that comes in from rent right now, that's being put in our operating account in case of repairs, maintenance, anything that comes up. Obviously, we pay property management fees in case we have months where we don't collect 100% of our rent on time. But we're keeping all the cash within the business. We're not looking to distribute yet.
Yeah, I think that makes a lot of sense, because the money that would go back to your investors probably wouldn't be that much right now. And having that money available for repairs, and then eventually to use that to help you grow the portfolio, I think that makes a lot of sense at the stage that you're at. So and
it helps to have cash in the bank. When you're asking to borrow money, lenders like to see that you have cash in your account. So we're trying to keep as much cash as we can.
Yeah. And then so if someone were to leave, because with 13 people in your group, there's always going to be people that have different things come up in life and they may need to get out. So you would just replace them with another investor, or somebody would buy them out. Like, that wouldn't be a big issue to take somebody out.
No, I don't think so. We can easily estimate the value of the home. So if we had some appreciation, let's say it's been a year and we've had some appreciation, I think we can all agree on the valuation of the homes and pull the money out accordingly. But again, we have friends and other partners that want in, that would gladly buy in. We have partners that would double up their shares. So it's famous last words, right? I don't anticipate there being any issues. We're good friends and family, but that's not always the case. Yeah. So I anticipate we wouldn't have a problem, but I wouldn't, I would recommend having a clear exit strategy for the partners before going into business.
And then as far as your long-term goal, is this something in the future that you see paying cash flow to your investors, or are you looking to sell at some point and make a huge profit?
I think, if I had to choose one, I'd choose the latter. I would choose to build a big portfolio and then sell it for a profit, as opposed to this, passive income. For me, it's a lot. It's a game. It's a competition. I grew up a competitor. I grew up an athlete, and so there's no trophy at the end for passive income and getting a little bit of money. And we're not trying to build an annuity here. We're trying to build something really big. And again, this is a proof of concept, right? And so taking this to a whole nother level, making something really big. I've seen it done. We have countless clients at Planomatic that have started at, hundreds of doors and accelerated and gone past 10,000, past 20,000. That sounds appealing to me. That sounds exciting to me. Building a business, building an organization, and shooting for the stars. So yeah, passive income and profit sharing is not something that we're looking for.
Yeah, well, I think this is going to be interesting. We'll have to check in with you here in a year or so and see how things are going. But this sounds like a really interesting plan, and I think you're going to be very successful with this. So you mentioned Planomatic. Tell me about your business and what you do, and how maybe some of our listeners could take advantage of your services.
Sure. So we're a service company. We service the single family rental industry and beyond, but our focus is really in single family rentals. And we're the biggest provider of property insights, marketing assets like photography, floor plans, 3D tours, aerial photography, build for rent, community marketing. And we do that for our clients nationwide, and we do it really fast. And so we've seen, companies start out really small and grow, and we help them scale and grow through working with us, efficiencies. We're boots on the ground for them.
If Kori's plan of putting together a rental portfolio and then selling it off, if that sounds interesting and you want to learn from someone that has actually done it, you might want to check out episode number 285. It's from October 19th, 2020. It's a pretty interesting interview. Ken Brown from Baltimore joined us, and Ken had been with us 4 years before that interview. And he told us about his plan to put together a rental portfolio and then sell it off as a business. And he actually did it. He bought about 40 rental properties. He put them into a package and he sold it for a pretty big premium to a hedge fund. So that's episode number 285 if you want to go back and check it out. If you want to check out Kori's company, the name of his business is Planomatic. And I've got a link to his company on the website. You can find it at rentalincomepodcast.com/episode 334. And I'll also go ahead and put a link to Ken Brown's interview on that page also. I would like to thank our sponsor today for making this episode possible. It's Chaley Ridge from Ridge Lending Group. If you're looking to buy a rental property, whether you're just getting started or you want to add to your portfolio, the lender that I recommend is Chaley Ridge. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a special offer just for our listeners. If you mention Rental Income Podcast, she will pay for your appraisal up to $500. If you want to find out more or you want to set up a time to talk to Chaley personally, just go to ridgelendinggroup.com. NMLS 42056. Thank you so much for listening to the podcast today. Make sure you subscribe. We put out new interviews every single Tuesday. My name is Dan Lane, and this has been the Rental Income Podcast.